So maybe I just recap a bit. We had a very strong quarter, showing a net insurance results of 11.1 million this quarter and a PAT of 9.5. So compare against quarter on quarter, which is the preceding quarter, net insurance results has grown by about 82.8% and a PAT of 32.5%. And that stemmed from a lower acquisition cost due to a portfolio mix change and a lower reinsurance cost. And against same quarter of last year, which is a year on year, though there's a turn-on effect from fourth Q of 2023, even if we remove the turn-on effect, quarter on quarter, the year on year effect is still a 100% growth in terms of the insurance results and the PAT, right? And that's stemmed mainly from the top line growth, especially on the travel PA segment, lower reinsurance costs, lower attributable expenses due to our cost control initiatives, and also the recognition of the deferred tax assets. While there are some adverse effects, which we saw slightly higher net claims incurred due to the East Coast flood, but it's not alarming as the total exposure is very small, not material. And also there was some market volatility in terms of the investment income. Hence, you will notice that the investment income at 5.7 million is actually lower than the preceding quarter as well as the same quarter of last year, mainly due to the market volatility as with Trump sanctions, and there was some uncertainty in terms of the US policy. Okay, we will move to the next page, which shows you in terms of the combined ratio improvement. So in terms of our combined ratio, you will notice that this quarter we outperform against on quarter, which is down by 5.2%. And against year on year, we are also performing better by 68.2%. And on a quarter on quarter, the improvement mainly comes from the lower acquisition cost as well as the reinsurance cost. And against year on year, the improvement actually stemmed across all the ratio from NCI, acquisition ratio, and reinsurance ratio. Okay, moving on to next page. This will be able to give you a flavor of how we perform over the last few quarters. It's a clear sign that we are in the right path of a recovery. There was some noise in the last few quarters with some large one-off event, from the turn-on impairment in fourth Q to a few large fire losses that we have shared with you in the previous quarterly announcement. There were also some RAOT impairment from our associate company, and we also had some intangible assets impairment write-off from our Life Sandbox company. So what we are seeing is more of a recovery and a more normalized of our results. And we are pleased to share with you the recovery path from the Q onwards. Hence, you are seeing a positive growth trend of 7.2 million in last quarter and 9.5 million this quarter. Okay, moving on, next page. Just to give you an overview of the full year results. So on a full year basis, we have clocking net insurance positive results of 3 million with a combined ratio below 100% at 99.2. That's mainly driven by the high insurance revenue from the travel segment, and partly due to the lower allocation of reinsurance premium in line with our exit of a commercial strategy. We also take a lot of effort in controlling our expenses, despite some higher claims from the motor and fire book in the first half of the year. And in terms of a PAT, we have definitely grown more than 100%, though the amount is quite modest at about 2.7 million. But that's mainly due to some of the one-off event in the first half of the year, which I will bring you to the next slide to show you the normalized effect by removing some of the noise in the first half. So the subsequent slide is clearly shows you that if you were to take out the 4 large fire losses, the impairment losses on the intangible assets, the RAOT impairment, our normalized profit should be around 16.1 million. So compared to the same period of last year, if we take off the turn-on effect, so we'll be probably comparing the normalized profit of 16.1 versus about 1.8. Okay, moving on, next page, just to show you the combined ratio breakdown on a year-on-year basis. So we have definitely improved in terms of a combined ratio, which shows improvement by 3.2%. And this is largely driven by the lower reinsurance ratio. Though we had some higher net claims incurred and attributed expenses, that's mainly due to the 4 fire large losses, as we explained earlier. And we do note that the overall motor loss ratio was slightly higher in the first half. Having said that, we do see improvement in the motor loss ratio, especially in Q4, right? Which we do see the overall motor loss ratio came down by about 5% point in Q4 itself. Yeah, and next slide will just give you an overview of the investment breakdown. So money market fund is about, so overall money market fund is about, we are still holding a strong deposit, about 16%, and the others are in a unit trust fund, about 83%. And out of the 83% unit trust fund, 8% is in money market and 92% in fixed income. The underlying securities of our fixed incomes are in the low risk asset segment, mainly in government securities, government investment securities, and government guaranteed corporate bonds. Okay, with that, I will pass on to my colleague to share with you on the business updates.
Thanks, Theo, for the financial updates. So the next section will be business and other updates. I'll pass over to my colleague, Alif, to present on the travel updates.
Thank you, Wai. Good evening, everyone. So I'll go with the update on the travel pillar. For the period under review, basically, we have seen the strong momentum on this travel pillar, which is driving our growth for our business. So under the vertical on the expansion of the market presence and reach, so the product that we have for the inbound product that we recently launched back in November, December, we have seen the expansion of the 10 new market coverage, which the market actually relevant for the Australia, Brunei, India, Japan, Kenya, Korea, Kazakhstan, Myanmar, Saudi Arabia, and Taiwan. Then also we have seen the penetration for the offline travel agent for our key airline partner in Malaysia under the period review, which contribute approximately about 20% to the airline business portfolio. Then under this vertical as well, we have seen the expansion of the distribution partner onboarded, which we have 4 new OTAs, 1 in Thailand and 3 in Indonesia, and also the induction of the 4 new online broker in Thailand by our associate company, Team Protect Thailand. Then under the vertical of the Travel Center of Excellence, we are pleased to report that we have seen the average take-up rate on our primary airline partner under the platform remain healthy. We have seen the growth of the 75.7% year-on-year growth under the quarter review, with the key initiative on the UI/UX changes on the airline platform, as well as the PTIC selection on the selected market, and also on the selected focus for the premium plan, which contribute to the better and higher premium. And also under the Travel Center of Excellence vertical, we have launched a partnership with the ticket refund insurance and the Spot PA with Ticket to You, which offering a peace of mind when there is a booking of the events. And also through the partnership with the Go Live Asia, we are providing an exclusive ticket protection to cover our concert goers against the various unforeseen events. Then for the last vertical under the travel pillar, which is the Beyond Insurance for the travel experience, we are pleased to announce that we have launched a smart delay launch pass in collaboration with the third parties partner, which we have added to most markets in Asia for both domestic and outbound international. So this is relevant for the bundle of the value pack for the airline partners in order to diversify our income sources beyond insurance. So I'll pass it to my colleague Joseph to provide an update on the key growth focus.
Yeah, I think for the next coming quarters, so our focus will be mainly on these 3 verticals: expanding market presence and reach, travel COE, and also go beyond the insurance. So the first few initiatives that we'll be doing actually will be on the pricing review on all the inbound product. Like my colleague Alif has mentioned, we have rolled out this inbound product for all the countries. Just a small note on that, inbound product means that we are start offering underwriting by Team Protect Malaysia to underwrite all the tourists that are coming into Malaysia. Yeah, so this is what we are doing at the moment, and then we will be doing a pricing review. So it means that we'll look at the pricing. Currently, maybe the pricing is based on Malaysian's pricing, so we will change it to become like maybe Australian pricing, maybe Taiwanese pricing or Japanese pricing, so to be on par of their local markets. Yeah, so this is what we plan to do in the coming quarters. And also, secondly, we also are looking at replicating all our successful models that we have piloted in Malaysia. For example, our travel agent model that we have adopt a net price strategy that we have seen some tractions in Malaysia. We plan to roll this and scale this in Thailand, China, and any countries that have the travel agent model. Yeah. Then the third one, okay, of course, we're also looking at to go beyond just airline partners. We are looking at like what my colleague has mentioned, that we're working with OTAs or online brokers or even any other travel ecosystem players. Yeah. So the second one is on the travel COE. So this will be our kind of like research and analyze what is the key pilot to take place. For example, in Malaysia, we have seen that we have a strong growth in terms of the take-up rate. Okay, so how can we replicate this in other airlines partner, for example, in EMEA region or in Vietnam regions? So can we replicate this successful model, successful products, or successful systems into all those regions? Yeah. So by doing this, we can achieve some of the economy of skills and also replicate the same success or same what they call a high take-up rate at all those regions. Yeah. Then we also try to be like going deeper into the travel ecosystem, targeting the regional players. So it means that we are looking at travel agencies, hotel chains, cruises, event organizers, and many more out there. Yeah. And last but not least, we're also looking at how can we go beyond the insurance. As we notice, there are two things. Okay, so the customer trend are changing. Okay, more and more customers would like the insurance product, because insurance used to be a very intangible concept to customers. So it's a piece of paper. So right now we are thinking, how can we add on the value-added services and also all those non-insurance together with the insurance to make the to provide a best of class of the customer experience. Yeah. So for example, that we have rolled out the delay lounge pass. Early on, whenever there's flight delays, we just pay out in terms of the some cash payout to the customers. But these days, on top of the cash payout, we're also looking at, can we provide some lounge access? So it means that for the 2 hours delay, can the customer access to some VIP lounge and spend their waiting time there? So we feel that this will transform some of the customer experience. Yeah. And also we are looking at like to expand all the flight delay insurance to our airline corporate client as well. So this is, we feel that there is what we call a potential upside for our revenue. And also we're also looking at like we want to roll out even more new value-added services, for example, eSIMs, or even other non-insurance or value-added services together or packaged together with our insurance. Yeah. So this sums up our key focus for the coming quarters. Yeah. I will hand over.
Thank you. Thank you, Joseph. So the next slide, we will be providing motor updates by my colleague, Jose.
Hi, good evening, everyone. For Moto, I'll be updating two parts. One is business and claims. For business, the portfolio mix is showing a positive trend to achieve a better loss ratio. For mid to high sum insured segments, the mix has grown from 42.3% to 48.7%. Whereas our motorcycle segments is also growing from 13.7% to 17%. As far as our motor PA attachment rate is concerned, we have actually grown from 32.1% to 35.7%. The improvement of mix is mainly contributed by post-Malaysia distribution, where the attachment rates increased from 45.2% to 54.2%. The pricing optimizations where we have repriced our motor policy in July is also showing a positive result where we are seeing our average premium is gradually increased as what we are expecting. When it comes to claims, the claims initiative that we have rolled out to improve the claims management efficiency is also showing a positive result where we are seeing a 5% loss ratio improvement in the fourth quarter for financial year 2024. We are expecting to see further improvement in the coming quarter as we are continue to roll out this exercise. Thank you.
Thank you, Oli. We move on to the last slide, which is other updates. I will hand over to our Chief Strategy, Chu to share the updates.
Hi, good evening, everyone. Just some sharing on some of the awards we have and some good news on achievement on our ESG and corporate good front. So award for last quarter, iBending had actually named Tune Protect as the number one ranked winner as well as number one ranked Malaysian travel insurer for Malaysia. Yeah. And then on the customer experience, there's two awards. One for CXP Best Customer Experience, and we are also in the top 10 of customer service excellence in terms of CX Malaysia 2024 report. So these are the three in terms of awards. On ESG, we have been on the FTSE for Good Bursa Malaysia Index for a couple of years now. We are proud to say that we've actually gone up in our rating from 3.6 to 3.8 ranking wise, and we remain as the only listed conventional general insurer that is in the FTSE for Good. Yeah. Corporate good, we have achieved for the year about 7,300 corporate good hours or CG hours. That was a target that we set ourselves to achieve in 3 years, but we have already achieved that ahead of our timeline. And that has been achieved by December 2024. Our target was 6,000 hours, but we've already done 7,300. We are looking to renew this target for this year moving forward. Yeah. You will see the initiatives that we had done included in tree planting as well as digital and sports excellence. Yeah. Thank you.